Howdy. So today it is March 15th, Monday. I haven't taken any trades, as you can see here. The market did have some interesting stocks moving today. We had CHEK, which had a nice move in pre-market. This would have been a great spot right here to buy, but it broke down at the market open. SGLB has been trending up a little bit, but a little bit choppy. There was a really nice short pre-market and at the market open on ACER. This would have been my bread and butter trade for the day, all the way from breaking the VWAP here at 650 or so, and right now it's just above $4. So that would have been a great short for me today. But today I've been focusing on myself. The last 2 weeks I have not been in the zone as far as managing my losing trades. And I'm going to kind of talk about some things that I've been, looking inward and doing some research and where I can do better. And also just basically my relationship as a trader with fear and with hope and with pain. So I have this sheet here, and before we dive into it and kind of talk about everything, I just want to tell you this. Trading is painful no matter what. It's painful if you're not making money because you're not making money. It's painful to lose money. That's a loss. Experiencing that loss of money is painful. And if you are a profitable trader, or if you're having a period of profitability, it's still painful. Well, so if you are a profitable trader overall, it's painful because the actions that you take in the market as a profitable trader kind of have to defy our human instinct when it comes to pain. So I'm going to get into that here. So basically, I'm my own worst enemy trading, and that is because it is human instinct to avoid pain. That's how we survive as humans. So this works against us in trading because, as I'll get to here, it's very important to embrace pain, and pain is a part of taking good trades. So we're going to break this down a little bit further into there's all kinds of emotions involved with trading. There's fear, there's greed, there's hope, there's loss, there's all these things that are impacting us when we're trading. But I'm going to simplify it down to fear and hope here. So it's easy to be fearful when we should be hopeful in trading, and it's easy to be hopeful when we should be fearful. So let's look at someone trading based on normal human instincts. If you're in a winning trade, so you take a trade and you're up on the trade, you have an unrealized profit. It is a natural human instinct to fear losing what you have sitting in front of you there. So it's very common for people to take profits based on this instinct. Now, of course, there's nothing wrong with taking profits trading, but in order to win more and have bigger wins than smaller losses, you have to be strategic about when you take the profit, because trading is basically random. It's not basically random at all, but you can look at it as being basically random and still be profitable if you let your winners grow and you cut your losses short. So if you take a trade and you're having a little bit of profit on that trade, unrealized, it's a human instinct to take it off the table. So reducing share size and then maybe stopping trading for the day or on that stock is natural human instinct. And that's because humans don't like pain. You're avoiding the pain. So let's say we're trading instinctually and we're in a losing trade. You take a trade and it's going against you. Well, instead of over here where we should be hoping that the trade is going to grow and increase because it's moving in our direction. So we don't want to stop it. We don't want to not capitalize on the full move that it's going to make. Instead of being hopeful when we're in a winning trade, if you're trading instinctually, you're going to be hopeful when you're in a losing trade, because we don't like losing. Humans don't like losing, and we want to get back to where we were. So we'll stay in the trade, increase our share size, and keep trading. And we're doing that, once again, same reason as over here as the winning trade. We're doing that to avoid the pain of the loss. So we're avoiding the pain here, and it works against us because here in the winning trade, we take the profits quickly without trading the market. So you might be up $100 in a trade, and it could go 2, 3, 4, who knows how many times farther than it did from your price in your direction. And if you're not trading the technicals, so all of this is important to combine with the markets. So you do have to have that knowledge as well, but that's easier to get a hold of than going against human instinct. So now let's look at how it should be to be profitable trading. How it is, what you need to do to be profitable. In winning trades, instead of acting on fear, you need to be hopeful. You need to be hopeful that it will keep going your direction and let the trade run. Now, you do want to stop out of trades if they do go into the green, you have profit and it's coming back. At some point, you're going to get out of the trade. But you don't want to, prevent yourself from capitalizing on a much larger move. So you need to let the trade run and maybe increase your position size on a good trade. So it's uncomfortable to do this because we want to secure the profit. So this goes against human instinct. You're embracing the discomfort of not having the profit. It's unrealized. You don't have it yet. It's sitting there right in front of you, getting bigger and bigger, and you want to take it off the table and secure some of it. But if you look at the chart and there's no good indication that it's turning around, then you might want to consider going against your human instinct of fear and trying to hope for more profit. So this is the flip side, where you flip the roles of hope and fear. So basically what this is doing is compounding the good decision of taking this trade. And on the opposite side, right here, if you're in a losing trade, increasing share size in a losing trade is compounding a bad decision or a bad trade. And this is what I struggle with most, is large share size and adding to bad trades that are going against me. This is where I have, not all the time, but fairly often in the last couple of weeks, I had very large losses because I was not being as fearful in my losing trades, and I was hoping to make back what I had lost. So back to good profitable trading. If you're in a losing trade, you want to be fearful of losing more, and you want to get out of the trade or decrease the position size and stop trading this stock. And that is embracing pain, because it is very hard for us instinctually. We don't want to incur the loss, and when we haven't realized the loss, we don't feel the same pain as if we've actually accepted that we're in a losing trade, taken the loss, and moved on. And the quicker you can do this, the better off you will be. So instead of being competitive in terms of being right or wrong, it's just trading the market. If it does move in our direction, great. We'll hope that we can get as much out of this trade as we can, and we'll get out of it when the market indicates it's time to. If it's turning around, then that's a time to get out. But you don't want to there's a whole lot of things you can go down that road as well, because the market, oftentimes people will get out of trades right when the market starts pulling back a little bit after it's made a move in your direction. But it's important to look at bigger time frames when that's happening. So basically, what this says is that our human instincts and trading with our instincts, those instincts are leading us to avoid pain in the present, but it ends up costing us later in terms of, our account. Profitable trading is embracing the pain and discomfort now and taking action that is accepting of the pain of having an unsecured profit that isn't yours yet, and letting it grow, letting it run, exploring how far it can move in your direction. That's discomfort that a lot of traders can't handle and will need to learn to handle in order to succeed trading. And then over here, embracing the pain of taking a loss. You can take many losses and have few winners and still be profitable, as long as you are good at taking losses and letting your winners run. My biggest struggle is right here. I have a strong tendency to hope when I'm in a losing trade. And I can't be too hard on myself. It's natural human instinct. Without hope, we would be lost in, the rest of our lives. But we have to be sure and be very actively monitoring where our minds are and whether we're being hopeful or fearful, and whether or not it's going to have a good impact on each individual trade. The thing about this whole, visualization here, this whole thing, is this applies to any time frame. Here I have winning trade, but it can be a winning trade, a winning day, a winning week, a winning month, a winning year. So for me, I think this mostly applies on the individual trade and the daily level. But the reason I'm kind of stepping back from trading right now and just being a little bit cautious and analyzing this is it could grow to a bigger and bigger time frame, because I did have 2 weeks just now where I struggled a lot with this, and it compounds on itself. It compounds whether growing or reducing the size of your account, and it compounds emotionally, instinctually. And that's what's so hard about it, because as humans, we've been compounding, building these instincts up over thousands of years. It's programmed into our brains. It's the way we are wired. And we have to be aware of that trading and do the opposite, which is really hard. So I hope that this has maybe helped you at all, helped you in some way to be a little bit more aware of some things that are going on with instinctual, emotional trading versus how it is best done. And I'm going to be really focusing on managing my losing trades better in the coming days and weeks. I'm really good at this. Occasionally, I will get to a point where I start taking profit where there's no indication, but I'm generally pretty good at managing my winning trades and not taking profit too soon. I need to focus most on my losing trades and getting out quickly or decreasing the share size versus increasing. I have a tendency to add to losing trades, and I don't need to. It's not going to help me in the long run. There are some strategies where you add to winning trades and it helps you get out break even, but you have to really know what you're doing, and it's way riskier to do that. So I hope this has been helpful. It's helped me to write this out and analyze everything. We as humans are our own worst enemies in the markets, and there's a lot of, especially if you're looking at like trading guru YouTube videos, things like that, there's a lot of emphasis on the technicality of trading, of charts, of market information, of news, of all of that. But there's, I don't know his name. I think he was a, like a floor trader, and he's gone now. But there's a quote that goes something like, well, most people are paying attention to, reading every little word of the news. I'm paying attention to the emotion and the way that I respond to everything. And if you look inward, you'll do a lot better trading, I promise. So thanks for watching. This was a little bit impromptu, so not amazing quality video or presentation, but very, very important subject. So I hope you look inwards and can get something out of this, and I hope you can be you can have hope when you're in winning trades and have fear when you're in a losing trade, because that's the best way to go. All right, have a nice day, and I'll be live streaming my trading. Hope to every day, at least 15 minutes before the market open, and I look forward to seeing you in the live streams. I'll see you later. Have a nice day.